Good morning, everyone. Welcome to Thai Union's Analyst meeting for the second quarter of 2025. My name's Nonwan Kirat-Paisan, your MC today. First of all, I would like to introduce our speakers. First, Khun Thirapong Chansiri, our President and CEO. Second, Mr. Ludovic Garnier, our Group CFO. And last but not least, Khun Pinyada Sangsakdahan, Head of Investor Relations. Today's session will take around 1.5 hours, including the Q&A, and followed by a 10-minute break before the TFM result announcements. Without further ado, I would like to invite Khun Thirapong to begin the presentation.
Good morning to all of the analysts joining us today and representatives from the financial institutions. Today, I am going to report on the results for the second quarter. For the most part, the profit was sales was at 33.39 billion Thai baht. There was a bit of a drop, 5.4% year on year. Nonetheless, mostly the drop is due to the foreign exchange impact in Thai baht terms. And it's a 4.7% impact, and organic sales dropped by only 0.7%. In the second quarter, we have many things that happened. For instance, the U.S. tariffs, and this has disrupted our operations quite significantly. And we have the new tariff announcement. At first, we were looking at 36%, and this was something quite new to us. And it was there was a limited time frame for us to ship our products out in the 4th to the 5th month, and in the 6th month. And when I say disruption, I'm talking about not just impact from the U.S., but also we were looking at results from the tariffs this time around, and everyone was, of course, in a state of confusion. In the second quarter, nonetheless, in terms of our profit margin, it's in favorable territory. It's in line with our plans. We're looking at 19.7% gross profit margin, and I'm confident that moving forward, we will see even higher numbers, higher than 20%. And if you take a look at our operating profit, the adjusted operating profit, which does not include our transformation cost, we grew by 3.2% year on year. And our operating profit margin is at 6.4%. Our net profit has also grown. The adjusted net profit grew by 13.2% year on year. Overall, for the second quarter, this is a quarter where all of our business categories have returned to positive territory, especially in our branded business in Europe. And otherwise, it's seasonal. We're looking at the summer season where sales are already strong. On the next page, you can see a clearer picture of our transformation costs in the second quarter at 233 million baht, and we grew by 13.2%. And if we do not include those items, we grew 4.4%. And we want to emphasize our earnings per share. Earnings per share for us increased 18.5%. This is partly not just due to our operations, but also our buyback program, our share buyback program. And this is to increase the return to our shareholders. And the EPS was at 0.32 Thai baht per share. And for the first half of the year, our sales were at 63.17 billion Thai baht. Overall, you'll see that there's been a drop of 7.8% year on year. Our gross profit margin is strong though. It's at 19.3%. And the other adjusted numbers, our net profit has grown 11.2% year on year. Our net debt, it has increased from 0.9 to 1.1 times, but that is within our comfortable range for us. And the reasons behind this are due to our dividend payout and our share buyback program. These are the main reasons. We have increased inventory as well in the past, and this is in line with the season. And it's nothing that we're concerned about, and we are confident in the second half of the year our net debt to equity will decrease, as we will not have any share buyback to record. And on the next page, you can see that our share buyback, we are a company that is very active in this regard. We have 4 programs. The first 2 programs we decreased capital already, and the third and the fourth programs just completed at the end of the year. And I would like to reassure you that our share buyback is it's not that we're buying the shares to sell them off again. We want everyone to rest assured. And on the next page, this is about our dividends. As always, in the first half of the year, we pay at about 59% of our profit, or at 0.35 Thai baht per share, and this is higher than in the past 2 years, whether it was 2023 or 2024. So the first half of this year is a high level for us. And the ex-dividend date is in the 15th of August, and the payment date is September 1st, and we are confirming this date. And for me, the last thing I will discuss with you today is the announcement of our intention to buy shares of TU from 6 to 20%. And you can see from the letter of intent from Mitsubishi that they would like to increase their shares up to 20%. And why 20%? This is because at 6%, all they do is record the dividends. What they are hoping for is, in addition to being a business ally with us, they also want to record equity, meaning profit and loss. Mitsubishi is not a stranger to us. Mitsubishi is a close friend of ours. They have invested in our business since 1991. And we do have a director from them since, we have had a director from them since 1991. And why have they decided to increase their investment? One reason is, I believe that there's a change in a generational change in the executives. Over the 30 or so years that they've been with us, there has been change in the organization. Their vision has changed, their strategies have changed, and in addition to this, the global business has also transformed over the years. I myself have had the opportunity to meet with Mitsubishi every 2 times a year, and this has been the case for over many years now. We have exchanged experiences, knowledge. We recognize the business is different these days. Consumer behavior has transformed. Customer channels are changing. In addition to this, the business models have also evolved. And so they have reviewed their portfolio in terms of investment, and they believe that their diversified investment, which partly was in seafood, especially in Asia, whether it's in Vietnam or in Indonesia. And I feel that they realize that today investing that is very spread out is not very synergistic. It's not strong for a deeper alliance in terms of business to strengthen business. And that is, I believe, the rationale for their desire to increase their investment to 20%. And we believe that this will lead to us being able to do work together and better. And the price that has been floated is 12.5 baht, and this is an all or nothing condition. And TU will become an associate of MC. Our investor relations has shared a press release, various press releases that Mitsubishi has issued. This transaction, I only learned about the board's decision, the main board from Mitsubishi, and they also announced this in their analyst meeting yesterday. And this was a demonstration of the significance of this investment. If you have any questions, we can discuss this further. And on the next page, you can see that Mitsubishi, its network, it's mostly in Japan. Toray is a company that is the world's largest trader of sashimi grade tuna, and it supplies sushi. Other species like shrimp and salmon, they're the biggest in Japan. And these are businesses that we have been involved in for the long term. And even though they have a small shareholding in our company, their strategy is perhaps to invest in many countries, but I believe that we will work more together, and they will consolidate their investments. More consolidation will be seen in terms of their investment. They will be able to improve their cost efficiency. Cermaq, this other company of Mitsubishi, they have investments in Canada, and it is the second largest salmon farming organization in the world. Cermaq has been a partner with us. They sold us raw materials, raw ingredients, both in Thailand and for Amara Alliance in France. And our alliance in France, we also sell to other organizations. And I'm confident that our work together will continue to grow. Mitsubishi will be a significant partner for us. The next company I'd like to mention is Nosan. They produce aquaculture feed. They are one of the main aquaculture feed producers in Japan, specializing in fish feed, whether it's kambanji or hamachi and other fish species. We have spoken with them, and we believe that there is great opportunity for more collaboration between the two organizations. And they also have investments in pet food. Mitsubishi is the 100% owner of the company known as Petline, and this is one of the leading companies in Japan. And in the past, we may not have interacted with them so much, but we believe that in the beginning, this is a low-hanging fruit that will lead to expansion into these various businesses for us. And Mitsubishi, just for a reference for you, Based on 2024, their profit was, they have a profit of $6 million, and they have investments in chemicals, commodities, and food is one of their groups, one of their main business groups. Thai Union in the past, we continue to do business with them, whether it's in terms of frozen business, salmon and pet food. These were examples of business that we've had with Mitsubishi over the years. And we'll go into more detail about our operating results, and we'll return to this topic later. So I'd like to hand things over now.
Thank you, Kontirapong. I'm very happy to be with you this morning. I want to start first of all with our 5 years picture. I think one of the very good development of this quarter is really our gross profit margin. Okay, gross profit margin at 19.7. This is record high for us, and you will see this is mostly coming from our ambient and frozen gross profit margin, while the pet care and the value added are declining a bit. So very good achievement, and it's a real performance. We don't have any one-off in this one. It's really coming from the sustainable performance of the company. We do expect also this high gross profit margin to remain in Q3 and in Q4, and that's why you will see in the guidance we have been upgrading our guidance for the whole gross profit margin for the whole year. Our top line is still a bit soft, okay, declining by 5.4%. I will elaborate in the next slide where it comes from. And you can see the net profit margin is improving, 4.5%, adjusted 3.8% reported. We are in a much better track. I think Q1 was a bit soft. We told you we were not happy with our performance in Q1. Q2, clearly, there is a catch up, and we want to confirm that in the next quarters. Just a quick focus on the top line impact. The FX changes we are facing are very violent. You can see here the USD rate has been declining by 10% compared to last year. Euro by 5% and GBP by 4.6%. So of course, you know we have a very significant portion of our revenue which are denominated in USD, in Thai baht, in GBP or in Euro. So this has a very significant impact for us. So I told you in Q2, our top line change is minus 5.4%. On this one, 4.7 is explained only by the FX. Okay, and mostly coming from the USD and a bit also from the Euro and the GBP. The organic is still declining. Okay, it's 0.7. But you can see compared to Q1, in Q1, the organic growth was minus 6.9. Now we are almost at break even. And definitely in Q3 and in Q4, we want the organic growth to be back to profit. Okay, we don't want to be negative on this part. And then Khun Kwan will elaborate on the view by category. On the raw material prices, I think Q2, we don't have big surprise. It was very much aligned with our expectation. The tuna price stand around $1,510 for Q2. For the rest of the year, we don't expect very significant changes. Okay, we don't expect very violent increase or decrease. We do expect the tuna price to kind of remain stable. The shrimp prices have been softening. If you remember, in Q1, we told you they were high, unusually high for 2 quarters in a row. Now it's 139 baht per kg, which I think is much more in line with our expectation. On the salmon price, same situation than in Q1. We are enjoying some low salmon price since the beginning of the year. Okay, and this is good for our chilled business in France and also for our frozen business here in Thailand. And again, we don't expect significant change to happen in the next quarters to come. Okay, and this is of course all these key materials. The fact there is not much volatility is one of the key drivers for our gross profit margin recovery in Q2. On the FX, I already mentioned, so you can see here the average USD was 33.1, and in July it has been declining a bit further. I think now we are within the range of 32.5, 32.6. Let's see what is going to happen on this one, but clearly Thai baht has been strengthening since the beginning of the year versus all the key currencies, and it has some negative impact in our top line. Euro has been rebounding back to 37.5 let's see also the next quarters, and the same for the GBP. So you can see the USD situation is very different from the other currencies. Just a quick overview on our ratio. ROE and ROCE are improving compared to Q1. I think we are on a good track. The inventory days are kind of flat compared to what we had in Q1, but they are increasing compared to what we had in Q4. This is absolutely normal. Okay, just for you to remember, in Q2, we build up our inventories, especially for our business in Europe. Why? Because Q2 and Q3 are the very high quarters of sales over there, so we always have this kind of mechanism. Now we can have a look here on the ratio on the right, net debt to EBITDA. So here it's increasing. It was 4.5 in Q1. This is 4.7 in Q2. The key driver for this one is really the share buyback activity. Okay, and you will see that in the next slide. We don't have any concern on this one. The expectation is in Q3, it will kind of plateau, and then in Q4, we should start seeing some decrease on the net debt to EBITDA ratio. On the net debt to equity, small increase also 1.1. We are still in what we call our comfort zone, so we are very comfortable with these numbers. Quick overview here on our net debt situation. So net debt has been increasing since the beginning of the year from 53 billion baht to 59 billion baht. And you can see the key driver is the box on the right, the red box, which is the equity by the share buyback activities for 4.3 billion baht. In terms of free cash flow, we are happy with the free cash flow generation in Q2. Okay, we told you in Q1 the EBITDA was a bit weak. From our point of view, in Q2 it's much better. We are facing an increase in our change in net working capital. Again, this is mostly inventory build-up, nothing to worry about. And the CapEx at 1.9 are really within our guidance and within our expectation. All the usual boxes, taxes, interest, dividends are fully in line with our expectation. You can see also the equity has been dropping from 56 billion baht to 52 billion baht. And again, this is the impact from the equity treasury shares. You need to remember that we do record this one in negative amount in part of the equity. And maybe one last thing from this slide is also the cost of debt is reducing. Okay, on average over the year 2024, you can see on the box on the top left. Last year it was 3.65%, and it has been reducing now to 3.38%. So we see the impact of the overall decrease of the interest rate in the world, and we are also benefiting from this. This is one of the key drivers for our finance cost to decrease year on year. An update on the BEPS 2.0, the Pillar 2. If you remember, at the beginning of the year, we told you we were expecting an impact between 300 to 350 million baht from these new measures. We are revising down the impact to 150 million baht for the whole year. Why? There are two key drivers. First of all, you know that for us, the key impact is really in Thailand. Okay, and our profitability in Thailand is lower compared to our expectation overall. And the second point is our tax rate in Thailand is higher compared to our expectation. And it's higher because in some of our businesses, like TFM, please stay after. We have the analyst meeting on TFM after. We had the end of our BOI for a few months. So for a few months, we have our effective tax rate, which is a bit higher. There will be a new investment being performed and a new BOI to come in. But overall, the impact is our effective tax rate is a bit higher compared to the expectation. At the end of Q2, we already recorded something like 31 million baht for this tax in Q2, and we do expect for the whole year to be around 100 to 150 million baht. Just for you to remember, also in terms of ETR, we expect for the whole year an increase by 2 to 3% compared to our historical effective tax rate. The last one is an update on Sonar and Tailwind. The overall picture is we are on track with our expectation. Let me start first with Sonar. Sonar, you know, we told you that the in-year savings for 2025 amounts to $15 million. At the end of Q2, we had $5 million, and this is supposed to accelerate in Q3 and in Q4. We told you we want to reinvest a portion of these savings. Okay, so all of this is not impacting our bottom line, but only a portion of that. You have some details on the below, but overall the message is we are on track with the expectation. For you to remember also, Sonar, the vast majority of this program will end by 2025. Okay, in 26, the activities will be extremely minimum on Sonar. And then on the right, we have Tailwind. So here the target was $17 million OP uplift for the whole year. After 6 months, we had $7 million. Okay, and again, here we are on track with our expectation. Please keep in mind that the timing from Tailwind is a bit different from Sonar. Here the plan is to go and to end by 2026. Okay, so overall the message is these two transformation programs, which are extremely important for us, are on good track. We were also very happy to have decided to launch these two programs since last year, and I think we are in a much better situation right now to face with all the uncertainty, the tariff issues, and the competition with these two programs which are already up and running. And now I will hand over to Kun Kwan for the business performance.
Thank you คุณ Ludo ค่ะ
Hello everyone. For the breakdown by business category, let's begin on the first page here. You can see that in the first half of this year, we had a sales contribution for the various categories. You can see for ambient, it's the biggest portion for us, the biggest contribution. It's at around 50%, and frozen is at around 29%. Pet care is at around 14%, and value added is around 8%. But the key thing that we would like you to take away from this page is in terms of our gross profit margin for each category. You can see that they are in a range that is in line with our long-term target. Like, for instance, the ambient business, the gross profit margin is at 20.8%, and the range that we gave you was 20 to 22%. In terms of frozen, it's at 12%, and the range was 10 to 12%. And pet care is at 25.1% for 2025, and the range for ITC was 23 to 25%. And for value-added business, our gross profit margin is at 27.1%, and the long-term target was at more than 25%. Taking a look at the second quarter for our ambient category, you can see that our sales were at 16.59 billion Thai baht. This is a drop year on year by 4.5%, mainly due to the FX impact and lower average selling prices resulting from the lower tuna cost. At the same time, our sales volume was relatively flat compared to the same period last year. And this is a result of the impact from the US with our private label there that has declined, and this is due to the uncertainty of the tariffs. Nonetheless, we have communicated it with you that we continue to boost our sales and our volume for the branded customers, and we continue to do this, and this is why the volume in the US and in Europe have increased. At the same time, if we take a look at the Middle East, you can see that we have increased demand from that region. Our gross profit margin for the ambient sector is at 22%, and this is the highest in the past 11 quarters. And this is mostly due to our tuna costs and our low tuna costs for inventory. If we take a look at the first half for our ambient business, this is for your information. What is important here is our performance in the first half. You can see that gross profit margin has increased to 20.8%, and this is a result of the same as in the second quarter. It's due to our inventory. We have stocked tuna at lower costs, and we have a higher margin, and we also have a promotional push for our branded business as well. Moving on to the second quarter for the frozen business, you can see that our sales were around 10 billion Thai baht, decreasing 7.4% year on year due to foreign exchange, just like the ambient business. And another impact was the soft sales of the private label for shrimp in the US market. Nonetheless, in the frozen business, this is a business that includes chilled salmon, shrimp, and our feed businesses done by TFM. And TFM in this quarter, they have a very clear growth performance, and this has offset the decline in our frozen sales in the past quarter. If we take a look at the sales volume, you can see that it has increased 8.3% year-on-year, mostly due to the sales volume growth in the feed business. And lastly, the gross profit margin has gone up to 11.7%, increasing 1.0% year-on-year. And this is in line with our target range that we told you earlier of 10 to 12%. This is a margin that has expanded primarily due to the feed and chilled business. Looking at the first half for the frozen business, the gross profit margin is also favorable, and this is our chilled and feed business. Our gross profit margin is at 12.0%. And on the right-hand side, you can see that TFM, which is our listed subsidiary, they have revised their target guidance. And the sales right now are forecasted to increase by 7 to 9%. And this is, we have lowered this from the previous target. Nonetheless, our gross profit margin has been adjusted upwards. It is now at 19 to 21% for TFM, and these are the two numbers that I want you to take notice of. In terms of the pet care business, our sales were at 4.4 billion Thai baht. That's a decrease of 1.5% year-on-year, and this is mostly due also from the FX impact and average selling prices that are lower. If we take a look at the graph on the right-hand side, you can see the proportion of the premium mix compared to the mid-priced mix. In the last year, we had a proportion for the premium mix that was quite high, and this is an exceptional base because usually our target for premium mix is at 47 to 50%. But our pet care business was able to achieve 50.4%. This year it has been decreased to 46.3%, and this is one reason for the drop in the profit. In terms of sales volume, it has increased 10% year-on-year, mostly because of increased demand from our U.S. key customers, and we continue to see demand from Europe and Asia and Oceania that is lowering. And the gross profit margin is at 25.6%, which has gone down by about 6% from last year. The reason is that this last year was an all-time high in our pet care business, and this is also due to a high premium mix, and the gross profit margin has dropped because of a drop in premium mix and higher depreciation, and this is from our ITC factory expansion and also the increase in the minimum wages here in Thailand. And on this page, we'd like you to take a look at ITC adjusting its guidelines for the entire year, taking into consideration the 19% tariff that is effective from the 1st of August. The sales growth expectation is therefore 3 to 5%. Gross profit margin is 23 to 25%. And our capex has been decreased for ITL from 1.5 billion Thai baht down to 1.2 billion Thai baht. And lastly, our value-added category, you can see that the sales is at 2.37 billion Thai baht, decrease in 9.2% year-on-year, and this is a decrease in profit in all of our segments. And we have value-added, we have packaging, and we have ingredients and supplements and byproducts in this category. And every category, the profit has dropped except for the ingredient business, where we have seen an increase in sales. In terms of sales volume, it has increased by 2% year on year. And the driving factor is the sales of our product and packaging and ingredients as well. And gross profit margin is at 26.3% in the second quarter. And this is similar to what we had in the same quarter of last year. And we have the byproduct ingredient and packaging higher margins to thank for this. The first half for the value-added business, we would like to highlight that this category has a high profit margin at 27.1% for this quarter, and we expect in the future that this business category will have increasing growth margins. And I would like to pass things back to Kun Tirapong to speak about the U.S. tariffs and the outlook for 2025. Thank you. I'd like to take this opportunity to go down into detail about the tariffs for all of you once more. For the most part, the announcement for Thailand, is at 19%, the U.S. tariffs, and therefore I am confident that Thailand, especially Thai Union, we remain very competitive. And I believe that with a tariff of this level, we have great opportunity to compete. What we need to keep in mind and monitor is our domestic consumption, because we believe that the prices in the U.S. will be adjusted upwards, more or less, due to the increased tariffs. Nonetheless, as you analysts perhaps know better than I do, speaking with various experts, many agencies say that in the short term, the first few years, the U.S. economy will continue to be strong, and with the access to foreign markets at 0%, their negotiating power, the negotiating power of all the countries should be 0% for all the countries. Therefore, the U.S. exports will increase, and therefore their manufacturing sector will improve, their employment. Their labor market is quite tight. It will become even tighter. And this may lead to an adjustment in the wage, increasing and improving wages. And I believe that there will be a trend for the interest as well. It perhaps will lower, and this will help the purchasing power of consumers to improve. This is what we expect. We've discussed this internally. We continue to monitor this. The key highlight on this page, aside from Thailand at 19%, which is the final tariff, what is important is India is at 25%. China, we don't need to talk about that. That's 30%. Ghana has adjusted upwards to 15%. And what is interesting is Ecuador, which I said once that it is a winner in terms of tariffs. It increased from 10 to 15%, so the gap between us and Ecuador is only 4%. Therefore, I believe that overall we should be able to compete better, and we should have less worries. I mean, of course we do have concerns, but those concerns are less than before. And in each category, taking a look on the next page, in terms of our ambient business, we have combined the base tariff. Normally we have the base tariff at 12.5%, and Ghana is the only country that has a base tariff of 0%. Ghana has the lowest total tariffs of 15%, and we have prepared our operations there to have Ghana export to the U.S. And take a look at Seychelles. This is also another production base for us. The total tariffs is at 22.5%. Thailand is at 31.5%. And this is the same as the Philippines and Indonesia. So there we don't have any advantage over them. Ecuador is at 27.5%. Vietnam is at 32.5%. Therefore, we would like you to rest assured that in terms of our ambient business, I am confident that in this situation, it's a very favorable situation for us. It's even better than the 36% scenario. Our production base in Thailand, we will continue to maintain our competitiveness, and this allows us to, it makes us more flexible in terms of business and our global network. In Lion, Georgia, from now on, they will have a bigger role. And in Vietnam, Ghana, and Seychelles, we have more flexibility, and we are ready. We're poised to take action. Our raw ingredients, the prices are different in the various areas. You might ask that, but we can use the benefit of our network to create the best benefit for our organization. If we take a look at the frozen business, this is even more favorable because the tariff has helped Thailand significantly. Thailand is at 19%. Ecuador is at 18.8%. You must understand that before this, other countries, they had anti-dumping duties and or also countervailing duties. If you combine all of that, Ecuador would be at 18.8%. Indonesia is at 22.9%. India is at 34.8%. Vietnam is at 58.1%. But we have to invest in India, and we continue to monitor things there closely. I think that in India, we will continue to keep an eye on things there. Their government, of course, will not be complacent. Thailand, in terms of our frozen business, we gain a lot of benefit and advantage from the tariffs. And on the next page, in terms of our pet care business, we have always told you that our premium product, our wet-based products, especially cat food, there are only three main competitors: Thailand, Vietnam, and China. Therefore, you can, again, rest assured, Thailand, we are at 19%, Vietnam is at 20%, and that 20% today, Vietnam is a small-scale player. We are 10 times bigger than them. Therefore, our Vietnam's competitive ability has not increased. We don't expect any significant change for Vietnam. China is at 30%, and in terms of pet care, we are happier, less concerned, less worried, but we are not complacent. There are a lot of changes. We are keeping an eye on Vietnam. We have a production base in Vietnam. We are ready to change in the future. We are flexible. This is our main plan. Aside from that, everything that we have done from the past up until now, the transformation programs, for instance, analysts, of course, you may not be happy about this because of the cost involved, but I would like to tell you that we are very lucky to have started this in 2024. I believe that if we hadn't started in 2024 and we began after the tariffs were announced, that we would be facing much difficulty. To our cost resetting especially when the tariffs took place. We have been very focused on this. We are not going to stop, regardless of the impact of the tariffs, whether it's good or better than expected, because cost and quality are two key essential factors that will make us even more competitive in the future. Change will happen. There will be things that we cannot expect, but internally we will continue with these efforts. We will be very serious and focus on these. And in terms of our commercial focus, in every category, whether it's our ambient business, branded, from our cost resetting, our brand is even more cost competitive than before, making us even stronger in terms of competition in volume and market share. And we also have our marketing support, which we will continue with. We want our 5%. We will continue. We will not stop. And we hope that our brand will have a bigger role and that we will be able to create, to be leaders in every business that we're in, every market that we're in, our OEM business. Whether it's ambient, we will continue to push growth there. For the frozen business, we don't need to worry about that. We have adjusted things. We have adjusted our team, our structure, and we will see more opportunity there. In our feed business, you will have the chance to listen from the executives at TFM. They have done extremely well. And the future is in Indonesia, we said before, but in Thailand, we can create new opportunities. And in other countries as well, where we hope to see Thai Union Feedmill grow. The pet care business is the same, thanks to our Tailwind project. We hope that whether it's in terms of cost or M&A, growth, new markets, new categories for ITL, you can see that their results, their top-line growth, we are not stopping. We will continue to push forward. And this is our strategy that we will push on with. And cost, I would like to tell you that in terms of our Sonar program for TU, the cost will end at the end of this year. So don't worry about costs in that regard. For Tailwind, the costs will be concluded next year. And that is information for you. Our guidance, our outlook, our top-line growth, we want to be realistic because in the first half of the year we had -7%, but in the second half of the year we expect things to improve. Our growth we expect to be at -1% to -2%. This is based on the current exchange rate, and we hope that if the Thai baht does not change so much, our sales will improve. The gross profit margin, we want to push forward with this. Our guidance has been adjusted to upwards to 18.5 to 19.5%. We are looking at the upper end of the range that we provided. Our SG&A is in the same level, 13.5 to 14%. CapEx, we are going to manage it within a number that is lower than 4 billion Thai baht from this point forward. For the next few years, we don't expect to expend anything that much because our capacity we are already invested in beforehand and it was sufficient enough. We will focus more on investment in automation, digitalization, AI, all to be enablers to increase our effectiveness and efficiency. As for our dividend policy, it remains the same. We will continue to pay out 2 times a year, at least 50%. And this is the guidance for you for today.
Okay, so now I would like to thank everyone for joining us today. And now we will take a 10 minutes break and followed by the TFM result announcement. Thank you very much.